Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the continued problems that Russia is facing with regards to its oil production and why the continued weakness of the ruble is actually having a devastating impact on the oil industry. On the 21st of September, Russia announced to the world that it was introducing a ban on the export of all refined oil products. And this was a major surprise because firstly, Russia is sitting on some of the largest reserves of oil in the whole world. And secondly, Russia has 44 mega refineries. So the biggest industry in Russia is producing refined oil products. So the fact that they were introducing a ban on their most valuable export product at a time when the Russian economy is already in dire straits didn't really make any sense. You would have thought that Russia would have been trying to increase its export of refined products, not introducing its own self-imposed ban. And at the time, the reasons that were quoted for having to introduce that ban were maintenance at the refineries, bottlenecks on the railways, and the weakness of the ruble. And in today's video, we're going to dig down into those three topics and establish whether or not they are valid reasons for Russia introducing its first ever export ban. This seems very coincidental that it's happening at the same time that the ruble is cratering. We'll then go on to look at what's been happening with Russian oil prices, because over the last 6 months, Russian oil has gone up significantly as a result predominantly of OPEC Plus's decision to cut back on production. We've still got a slowdown in the global economy happening right now, so you should have expected oil prices to be falling as demand softened. However, because supply has been cut back so significantly, it's actually pushed prices up. And even though Russia is still selling its oil at a discount to general prices, when the price of oil rises, so does the price of Russian oil. So you would have thought that that should represent good news for the Russian economy. But one of the problems from Russia's point of view when the price of oil rises in the international markets is that it makes it more appealing for the Russian refinery businesses to export oil rather than selling it in Russia. As a direct result of the weakness of the ruble, you've actually got two different factors pulling in opposite directions. You can earn more dollars from selling at a higher price, but actually those dollars are worth even more in ruble terms. So the last thing that these refinery businesses want to do at the moment is sell their oil for rubles, because the value of those rubles is falling on a daily basis. And this is one of the reasons why President Putin recently introduced capital controls restricting what exporters are allowed to do with their US dollars. He doesn't want to keep fueling the export markets at the expense of the Russian economy, because that's what's happening right now. I'll also provide you with an update as to what's happening with the export ban, because it's been partially lifted in respect of diesel products. However, it would appear that there is an ulterior motive for that also. This isn't because Russia is now cool with exporting all diesel. It's actually potentially down to the fact that they've got nowhere to put it. They don't have any storage facilities. We'll then go on to talk about Russia's loss of revenue as a direct result of this export ban, which is significant. We're talking billions of dollars at a time when Russia needs absolutely every cent that it can get its hands on. And then finally today I'll wrap up with my summary as to what I think is likely to happen over the course of the next 3 to 6 months with regards to the export ban, the loss of revenue, and the capital controls that President Putin brought in recently. But before we get started on all of that, once again, thank you so much for all the great comments that you're posting. Please keep those coming. It's great to see all the different ideas and thoughts that everybody is having. Really does help to stimulate more ideas for more videos. So please keep that chat going. And if you'd like to see more videos like this, more face-to-face videos that I'm not posting on YouTube, and also find a way of avoiding adverts, then please check out my Patreon channel. However, if you don't like Patreon and you'd like to support the channel, please have a look below where you'll find links to buymeacoffee.com, as well as YouTube's super thanks and membership scheme. On the 21st of September, Russia shocked the world markets by announcing a ban on the export of all refined oil products. In a bizarre statement, the Russian government said, temporary restrictions will help saturate the fuel market, which will in turn reduce prices for consumers. We expect that the market will feel the effect quickly enough, but then it will depend on the saturation of the market and the results. First Deputy Energy Minister of Russia Pavel Sorokin said, in a cryptic message which alluded to the fact that surprisingly Russia had been experiencing shortages of fuel. And one of the reasons that the ban on the export of fuel was introduced was that Russia needed as much fuel as possible in order for the Russian farmers to be able to harvest all of the crops that were then coming into season. The reasons that Russia provided for the need to introduce this ban included maintenance at the Russian oil refineries, bottlenecks on the railways, and the weakness of the ruble. Now, in terms of the issue of maintenance at the oil refineries, this is something that has to be done on a regular basis and therefore is part of the annual planning for all Russian refineries. And Russia, as one of the largest exporters of refined products globally, has huge refineries all over the country. So planned maintenance doesn't explain why Russia would be forced to introduce an export ban, because this is something that Russia have been managing for the last 30 years. Equally, bottlenecks on the railways isn't a valid excuse, because the vast majority of refined oil products are being moved by pipeline to the ports, not on the railways. So basically what this leads us to conclude is that the reason that the export ban was introduced was because of the weakness in the ruble. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the last 12 months. And as we've discussed previously, when you're looking at exchange rate charts, you usually quote the strongest currency first. So in this situation, we're looking at the US dollar against the Russian ruble. And so the upward trend in this chart from left to right indicates that the dollar is strengthening and the ruble is weakening. And what this chart shows is that 12 months ago, one US dollar was trading for around 60 Russian rubles. Today, it's closer to 100. And the fall in value of around 66% in the ruble is really important when we put it into the context of Russian oil exports. This chart shows the movement in the price of Russian oil, often referred to as Urals crude, over the course of the last 12 months. And the trend of this chart closely follows what's been happening with oil prices globally. 12 months ago, a barrel of Russian crude oil was trading for around $73. The price hit a high of around $82 at the start of November. However, between November and March, there was a significant fall in the price of oil as a result of a general slowdown in the global economy. And by the middle of March, a barrel of Russian crude oil was selling for less than $50. However, as a result of production cuts announced by OPEC+, which is a consortium of some of the largest oil-producing nations in the world, including Russia and Saudi Arabia, oil prices over the last 6 months have started to rise, despite the fact that the global slowdown is continuing. And today the price of a barrel of Russian crude oil is trading for around $79. And the reason that I wanted to look at both the movement in the value of the ruble and the price of Russian oil is that the two factors are closely related in terms of the attractiveness of the export markets rather than selling oil into the Russian markets. So let's talk about what's happened during 2023. At the start of this year, a barrel of Russian crude oil was trading for around $50. And at that time, one US dollar was trading for around 70 Russian rubles. So a Russian refinery had the choice at that point of either selling that barrel of crude oil in the international markets for $50 or selling it into the Russian market for 3,500 rubles. If we now move forward to September the 20th, which was the day before the ban was introduced on the export of Russian fuel, the price of a barrel of Russian crude oil by that point had risen to $80 in the international markets. And on the 20th of September, one US dollar was trading for 95 Russian rubles. So in the first 9 months of 2023, we saw a 60% increase in the price of Russian crude oil in the international markets and a 36% decrease in the value of the ruble. And what that meant was that by September the 20th, Russian refineries could sell that barrel of crude oil in the international markets for $80, but to get the same amount of revenue from their home market, they would have had to sell that same barrel of oil for 7,600 rubles, which would have meant the prices in Russia would have needed to more than double in that 9-month period. However, if we have a look at this chart, which shows the movement in gasoline prices in Russia over the course of the last 12 months, you can see that in January, the pump price of a litre of gasoline was 75 US cents. However, by September, that price had actually fallen to 57 cents, which represents a reduction of 24% over that 9-month period. So you can start to understand why Russian refineries saw the export markets as being much more attractive, because wholesale prices were rising as a result of a general increase in oil prices, driven up by OPEC Plus cutting back on production. And at the same time, the value of the ruble was tanking, and the equivalent value of the dollars was significantly higher because the value of the ruble was falling. So as a result of the combination of these factors, the Russian refineries did not have any incentive to sell oil into the home market, and that is the reason why there was shortages in the Russian market. It was driven entirely by the continued fall in the value of the ruble. Now, in terms of the impact on the Russian economy of the ban on the export of refined oil products, this chart shows Russia's total revenue from all of its different fossil fuels dating back to the start of 2022. The dark blue section at the bottom is crude oil transported by sea. The lilac section above it is crude oil transported by pipelines. The red section above that, which is the key one in terms of this video, is the revenue from refined oil products. The orange section above that is pipeline gas. The beige section is liquefied natural gas. There is then a very thin red section representing liquefied petroleum gas, and the black section at the top represents coal. And what this chart shows is that Russia's peak revenue was actually achieved in March 2022, around 1 month after the invasion of Ukraine started, and that was predominantly as a result of the large spike in oil and gas prices at that time. However, since March 22, Russia has seen a continued and consistent decline in total revenues, and the biggest single contributing factor to that decline has been the reduction in pipeline gas sales as a result of Europe stopping buying all of their gas. However, if we focus in on the refined oil revenues, which is in the red section in the middle of this chart, you can see that back in January 2022, the revenue from refined product sales equated to around 250 million euros, which equates to around $275 million per day, and broadly speaking, the revenue has remained at around that level ever since. So what that means is that the ban that was introduced on the 21st of September was costing Russia $275 million per day in lost revenue. And the full ban on all products remained in place until the 6th of October, which represents a period of 16 days, equating to lost revenue of around $4.5 billion. On the 6th of October, the Russian government announced that it was lifting restrictions on the export of diesel fuel delivered to seaports by pipeline, providing that the oil refineries supplied at least 50% of all diesel they were producing to the domestic market. However, the export of gasoline and cross-border supplies of diesel by rail and road are still prohibited. And interestingly, Russia's first deputy energy minister, Pavel Sorokin, advised Russian TV that the storage facilities at the oil refineries had been full. And this lack of storage capacity could actually be the real reason why Russia has lifted its ban on the export of diesel. Because if the refineries don't have anywhere to store that diesel and they can't sell it quickly enough into their home market, which clearly they can't, the only other option available to Russia would be to cut back on production, and that could have serious consequences for the long-term viability of some of those oil wells. Pavel Sorokin went on to say that the ban will be fully lifted once the domestic market is saturated with fuel, and that we will be taking further steps depending on the situation. Now, if we go back to this revenue chart, we don't have a detailed breakdown of the revenue split between gasoline and diesel. However, this breakdown produced by the US Energy Information Administration shows that the ratio of gasoline to diesel produced from a barrel of crude oil is roughly around 2/3 gasoline and 1/3 diesel. And if we apply that same ratio to the $275 million of revenue that Russia is earning on a daily basis from its refined products, that would mean that the continued ban on gasoline products equates to around $180 million per day of lost revenue, which is around $1.3 billion per week. So once again, this shows how the weakness in the ruble is having a devastating impact on the Russian economy. So what's the summary and conclusion today? Well, I wanted to post this video firstly to give you an update as to what's happening with the fuel ban. And as we've talked about, the fuel ban is still in place. It was introduced on the 21st of September, and we are now not far away from that ban having been in place for an entire month. And that is having a hugely devastating impact on the Russian economy. As we saw from the data, in the first 16 days, Russia lost around $4.5 billion and is still losing hundreds of millions of dollars every single day, more than $1 billion per week. And this seems absolutely crazy for a country that is literally swimming in oil. Russia has so much oil, it doesn't know what to do with it. So it absolutely makes sense for Russia to be exporting as much oil as possible if it can find buyers. When Russia commenced its invasion of Ukraine, the biggest question that everybody was asking was who were they going to sell all of its oil to? If the West stopped buying, was there enough capacity for Russia to be able to find buyers for its refined products? The question nobody was asking was, do we think Russia is going to stop exporting oil because it didn't have enough in its home market? That seems completely ludicrous. But as we've seen in today's video, the reason that Russia has imposed this export ban isn't because they don't have enough oil. They've got plenty of oil. The problem that they had in the Russian market was that because of what was happening with the Urals price, it was going up significantly in the world markets from around $50 to the current level of around $80. But at the same time, the value of the ruble was completely collapsing. So in order for the Russian refineries to be able to earn enough money from selling into the Russian market, the price of Russian oil would have needed to have more than doubled. But as we saw from the data, the Russian authorities have actually introduced price controls for gasoline and diesel in the Russian home market. And the price has actually fallen over the course of 2023 by around 25%. So you've got a bizarre situation where the Russian oil refineries can make bumper profit by selling their oil in the international markets because prices have gone up and the value of the ruble's gone down. And at the same time as that's happening, the Russian authorities are expecting those refineries to be selling their product into Russia at lower prices than they were at the start of this year. And from a commercial point of view, that makes absolutely no sense. If you're running a business, you want to sell your product for the highest possible price. And if that means exporting it, then so be it. However, the problem that was causing in Russia was that they were genuinely having shortages at the pumps. And this came at the critical harvesting time for the Russian farming industry. And farming is absolutely critical to Russia for two reasons. Firstly, it produces a lot of food for the home market, so it's feeding the Russian population. And secondly, it's a big earner in terms of exporting all of the surplus that Russia doesn't need. So it was absolutely vital from President Putin's point of view that the farmers were given enough fuel at an affordable price for them to be able to complete all of the harvest, bring in all of the crops and make sure that everything was secured. And as a result of the shortages and the risk that the farmers wouldn't have enough fuel, this export ban was introduced. And this is obviously quite an embarrassing situation from Russia's point of view, because the last thing that you want to announce to the world is that we've really messed things up so badly that we're now having to ban all of our refineries from exporting their most valuable product. And for anybody that's watching who continues to doubt whether or not the sanctions are having any impact on the Russian economy, I think this situation absolutely proves categorically that there are major issues going on in Russia right now. The oil industry is the biggest generator of income for the Russian economy. So the last thing that President Putin wants to do right now is mess around with production and sales. Russia have faced lots of challenges over the last 18 months in terms of finding replacement buyers for all of the countries that sanctioned them. They've managed to do that in terms of the increased sales to countries like India, China and Turkey. So everything was in place to sit back and let that revenue come in. But unfortunately, the huge fall in the value of the ruble, which has been predominantly caused by the problems in the Russian economy, as we've discussed before, there is a link between the strength of your currency and the strength of your economy. So when your economy is doing badly, generally speaking, the value of your currency will tend to fall. And that's exactly what's happened to the ruble. And because of that situation, an arbitrage started to emerge in the Russian market. Because the Russian authorities are subsidizing gasoline and diesel prices at the pumps, resellers were actually buying oil that was meant for the Russian markets and then exporting that as well. And the fact that some Russian businesses were doing that actually made the shortages worse. And the fact that this export ban has been in place for almost 1 month really tells us that these problems are not easy to fix, and it's likely that Russia is going to encounter more problems like this over the course of the next 3 to 6 months. And I think what's really interesting when you look at the breakdown of who Russia is selling refined products to at the moment, two of the biggest buyers are the United Arab Emirates and Saudi Arabia. Now, obviously, both of those countries have a wealth of oil already, so they don't need to buy oil from anybody else. The reason that they're buying it from Russia is because it's cheap. It's trading at a discount to the international prices. And so they're buying in large quantities, putting it in their storage facilities because they've got plenty, and then waiting for prices to go up as they continue to cut back production through their membership of OPEC+. So this represents great business for those countries. And when you're talking about trade, generally speaking, if somebody's done a great deal, the opposite side of that deal tends to be a bad deal. And unfortunately, from Russia's point of view, that's the side of the trading equation that they're sitting on at the moment. As we've talked about in today's video, one of the reasons why Russia has had to lift its export ban on diesel products is that all the storage is completely full. Russia's energy minister has stated that on Russian TV. So the only alternative option from Russia's point of view at this point is either to lift the export ban or to cut back on the production of diesel. And as we saw from the graphic earlier, when you're breaking down a barrel of crude oil, you get around 2/3 gasoline and 1/3 diesel. So if you make a decision to cut back on diesel production, you'll also have to cut back on gasoline production, because basically you'd just be refining less oil. So Russia has found itself in a situation where, even though it has banned the export of diesel products, it had to lift that ban because it didn't have anywhere to put it. And the last thing that Russia wants to do right now is cut back on the production of crude oil, because if they start tampering with what's happening at the wells, they could find themselves in a world of pain as they go through the winter period. Because let's not forget, a lot of these oil drilling facilities in Russia are in really cold climates. So during the winter period, there's a risk of freezing. And Russia has lost access to a lot of expertise and technology over the last 18 months, because companies like ExxonMobil, BP and Shell have all left the country, and they've taken all of their experts with them. And they've also removed future access to chip technology, which is absolutely critical to production these days. So Russia is really walking a tightrope right now, and if it cut back on its production, it could find itself in real difficulty when it tries to start up that production again if those flows don't continue. So the overall summary of today's video is that the oil export ban that was announced in September by Russia proves categorically that there are major problems going on in the Russian economy right now. The fact that this ban is still continuing tells us that they haven't been able to sort out those problems. And one of the fundamental reasons why all of this is happening is because the value of the ruble has collapsed. And the reason that it's collapsed is because of the problems in the Russian economy. So this is quickly becoming a vicious circle from Russia's point of view. And it's going to be a very difficult problem to fix, because there isn't a silver bullet. There's nothing that will just put things right, other than stopping the war in Ukraine, which then potentially would put Russia in a position where it could start rebuilding its economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.